It is no coincidence that the current market feels pretty much dead. Nobody is talking about crypto, nobody's talking about Bitcoin. Bitcoin is just trading in a stable range. But the question is, are we going to see some kind of change anytime soon? This here is the Bitcoin cost basis distribution map. So at what price has Bitcoin moved the last time? And it seems like between 93 and 100K, a lot of people have their reference price. So this can, at least technically, act as a support level. The market is measurably going down in activity. It's cooling off. The number of transactions is going down. The realized market cap is going down. Everything is down. Is this good? Is this bad? Let's have a look at what historically happened during times like this. Here we see the realized profit over time. So we've got the Bitcoin price in black and the realized profit in green. And this chart starts in 2020. When the realized profit was high, this is also when the Bitcoin price tended to peak. So the long-term holders take profit. We've seen a similar spike when Bitcoin hit 72K and then once more when Bitcoin hit 100K. Yes, there were some long-term holders that also sold at 111K, but that's now slowing down again. Now, if you've been following this channel for a while, you know that we have been anticipating this. 111, 112K in Bitcoin was a major resistance. And still today, this resistance holds. This is a long-term Bitcoin chart starting in 2010, and this is just a curved line. There's nothing mathematical about this. But what's interesting is that historically, the price bounced off that resistance line very predictably. As in, for whatever reason, the price always stops increasing at that level. Currently, we are slightly higher with that resistance. It's now at 112.5K. But still, right? Isn't it interesting how those tops align very well and how that also aligns with the history of Bitcoin? So that's probably what was going on over here with some long-term holders selling. We might see that selling pressure again once we hit 112K potentially. But really, currently, everything is slowing down. I really like this indicator here, the value days destroyed metric, because it looks at what are the Bitcoin whales doing that tend to just buy and hold Bitcoin long term. So what are the diamond hands doing, the people with a lot of conviction in Bitcoin? When you're holding, say, 10 Bitcoin for 1 year, and then after 1 year, you're suddenly moving it, you're destroying 10 value years. If you hold your Bitcoin for 5 years and you've got 100 Bitcoin, you're destroying 500 value years. So the more Bitcoin you have and the longer you haven't moved that Bitcoin, the more you can potentially destroy if you finally decide to move that BTC. And historically, this was a very good indicator to at least potentially rebalance the portfolio. It wasn't necessarily always the perfect top indicator. We did in the future still go slightly higher, but it did give us a nice opportunity to potentially sell, right? Selling at 72K is not a bad idea if you previously bought at 16K. But again, this indicator as well is further slowing down. So the dormant Bitcoin stays dormant. It's not getting reactivated. No matter what metric we look at, it's all cooling down. Here is the transfer volume over time. So that's measured in US dollars. Again, when it's high, it tends to mean that the market is heated. When this is going down, it tends to mean that it's potentially a better time to get back in. We aren't yet at the lows we saw in Q2 and Q3 of 2024. Or the ones that we saw at the end of March of this year. We aren't yet at those levels, but the current trend is clear. The market is further cooling off. Here's the spot volume in US dollars, and here's the futures volume in US dollars. Again, the same thing, right? The more volume there is on the spot market or on the futures market, right? The levered bets on the price, the more heated the market tends to be. Currently, pretty much everything is in equilibrium. What I find interesting is when we look at the futures market, right, the bets on the price, we see that sometimes the majority of traders are very optimistic. They are willing to pay a lot of money to get long exposure to Bitcoin. And sometimes the market is very pessimistic. So the shorts have to pay the longs in order to bet on falling prices. Now, in either scenario, we tend to see a turnaround. We tend to see that the market is exaggerated. Have a look at this. This is the annualized perpetual funding rate for BTC. When the market is very bearish, we tend to bottom out. So this is when the shorts had to pay the longs in order to bet on falling prices. But the price didn't fall anymore after the crash. The same is true the other way around, right? When the market is extremely bullish, when it's very expensive to continue to bet on rising prices, when it costs annualized 40% to bet on further rising prices, that's when the market tends to peak and it doesn't go up in the short term anymore. Right now, the market is not overly optimistic, but it's also not incredibly pessimistic. We are in somewhat of an equilibrium. And I find that situation rather fascinating because the macro still looks very healthy. So this is the stablecoin market cap over time. Money continues to flow into the space. So whenever you send your hard-earned fiat currency to a centralized exchange, that centralized exchange will send this over to a stablecoin custodian and then mint the tokens on chain. And that's when we see this chart going up. The same is true the other way around, right? If you're withdrawing your money from crypto, this is shrinking because the stablecoin issuers have to send back the money. Since October of 2023, the stablecoin market cap is going up and it continues to go up. Year to date, the stablecoin market cap increased by 21%. And so because of that, I think that over time, the likelihood for a breakout to the upside gets higher and higher. What we've got over here is the stablecoin dominance. Not the stablecoin market cap, but the stablecoin dominance. How much of all of crypto in percent is currently in stablecoins? When this is very high, it means that a lot of people are currently in stablecoins, that the market is very risk off. Thus, prices tend to be pretty low. What we see at the bottom, this is now the Bitcoin price. On the other hand, when the stablecoin dominance is very low, it means many people are deployed into crypto. And that's where we tend to see local tops in Bitcoin. So one over here, another one over here. Currently though, we are neither expensive nor cheap. The market again is in balance. But as the stablecoin market cap is going up and the price is not increasing for crypto, we will see the stablecoin dominance continue rising. And at some point we might hit again the 9%. That's probably when we will see a breakout to the upside for Bitcoin. Again, assuming that we continue to see all of that money coming into the space. Now, it's very interesting to look at market structure. What kind of cryptocurrencies actually benefit from the inflows? And the short answer is it's mainly the major tokens. So it's mainly Bitcoin, Ethereum, Solana. The smaller the altcoin is, the more it's dependent on demand by the small retail investor, the more it's currently suffering. Have a look at the Bitcoin dominance over time. So this starts now in 2017. And Bitcoin dominance tended to peak out somewhere around 71% in the past. 71, 72%. That's when we had the Bitcoin dominance peak. And when that then went down, it means we had our altcoin season. Currently, Bitcoin dominance continues to go up. And I think this will stay at least until the end of the year. It might even take longer than that, depending on how quick Bitcoin appreciates. And so the flip side of this is the altcoins, right? This is now the small altcoins, the ones for the market cap 900 to 1000. The altcoins that have the potential, in theory, to go 10x or 100x. But in practice, they don't do this, right? This is the return in the last year. And most of those altcoins, they went down by 60, 70, 80, 90%. You pretty much burned all your money with those alts. And again, in the last year, Bitcoin went up by 50 to 60%. How many of those altcoins did better than 50 to 60%? It's 4 to 5 altcoins. So there is a 95% chance to do worse than Bitcoin when picking those smaller altcoins. Now, most people, once confronted with this situation, simply just abandon the altcoins and they buy Bitcoin and Ethereum and Solana instead. But I think we can take advantage of this. I'm doing this already for quite a while because it's not just the majority of altcoins that's doing poorly. It's also that some altcoins do very poorly consistently, as in the underperformance happens with very low volatility. What this means is when we flip a chart like this is now Balancer relative to Ethereum, we get this kind of performance. Now, isn't that nice? Over the course of 2 years, an outperformance of 500%. Over the course of 3 years, close to a 10x return. And so that's something we can't just get by buying and holding Bitcoin, but it's also not something that requires to try to find the needle in the haystack to take on all of that risk. Because again, this is the altcoin market we are dealing with. Most altcoins underperform Bitcoin and Ethereum and Solana. And the reason for this is token inflation. It's all of those early investors, all of the insiders, the team, etc., that gets additional tokens over time. They get vesting unlocks. They sell those additional tokens either for their own benefit or to just run operations. And that's causing all of that bad performance. But again, it's only bad performance if you're actually buying those tokens. It's good performance if you're flipping this around. You're betting on falling prices, especially of the tokens that tend to underperform very consistently. And it's really the relative valuations that matter. Because just measured in US dollars, we do sometimes see those rallies. This is 700%, or this over here is more than 100%. We do have these kind of rallies, but that's just in US dollars, and that's mainly triggered by the overall market going up. So if Bitcoin and Ethereum is going up, then Balancer, in this case here, also is going up, because a rising tide lifts all boats. But if we hedge ourselves against the macro, we can play the underperformance of various altcoins in a quite clean manner, without all of that volatility, without the rallies that bring in the risk when we bet on falling prices. Now, I have followed this strategy for quite a while. This is my personal return over buying and holding Bitcoin over the last 4 years. It's a bit less than that. So at the bottom, we see the monthly data points. And had I just dollar cost averaged into Bitcoin, I would have gotten this gray return. But instead, I got the black line again through various strategies, recently mainly through relative valuation bets, right? Doing things like this here. And so our community is, of course, doing this as well. This is where people share their wins. Of course, individual trades are very impressive, but it's not necessarily about the individual trades, because everybody can have a lucky trade here and there. It's really about setting up a system where the odds are in our favor. Trying to pick the needle in the haystack, the one altcoin that makes a 10x, is definitely not having the odds in our favor. Most altcoins do poorly. But betting on something like this to continue to go down, I think is a pretty good idea. Again, the long term matters. Now, many people are actually afraid to set this up. They don't want to learn these kind of things because there are some horror stories, how people lose all of their money by betting on falling prices. And this is true. If you set too much leverage, if you don't have stop losses in place, if you don't have proper risk management, you can lose everything with shorting. But if you're hedging versus the macro environment, so if you're using relative valuations, and if at the same time you've got your risk management in place, you set your stop losses where needed. So there are 2 tutorials just on that topic, then you are good to go, right? Then you're very likely going to make money long term. I used to do a lot of those relative valuation bets with decentralized finance, so with borrowing and lending platforms like Aave. I recently switched towards perpetual futures, so now I'm using Hyperliquid, and I started this 2 months ago, and so far this is my return. And here, this drop, this is where I forgot to set a proper stop loss. Without that drop, this was a short squeeze on Launchcoin, this return would look even much nicer. But again, right, this started with 40K. It's already more than 20% in the profit after 2 months. And while of course nobody knows and nobody has guarantees whether those kind of returns will continue, I think it's still way safer to bet on the trash staying trashy than to try to find this one little nugget in a sea of bad investments. So if you want to join us, feel free to check it out. It's currently $125 per month. I of course share my own trades as well. You can just directly copy trade me, no problem. And you should see a link to the premium sign up page directly over here. Just click on that, it will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.